Welcome back to Iraqi Dinar Alert, where we cut through the noise to focus on what really matters. Today, we're diving deep into a topic that separates the smart money from the crowd, the 25% dollar range. This isn't some YouTube buzzword. It's a powerful macro financial signal that has everything to do with the US dollar, emerging markets, and yes, the Iraqi dinar. By the end of this video, you'll understand why the big players are watching this range and what it means for 2026. So, what is the 25% dollar range? Let's break it down simply. It's not about a specific price, but a controlled zone where the US dollar index, or its real purchasing power, moves. Think of it as a bandwidth, about 25% wide, that reflects the balance between monetary tightening and easing, global trade pressures, and confidence in US fiscal policy. While retail investors are glued to daily price charts, asking if the dollar is going up or down, smart money asks a different question. Where are we inside this allowed range? The real action happens at the edges of this range, because that's where major policy decisions are forced. When the dollar is at the top of its range, it's super strong. This hurts US exports and puts a major squeeze on emerging markets that have dollar-denominated debt. Capital tends to sit on the sidelines, waiting for a better entry point. But when the dollar is at the bottom of its range, the opposite happens. Inflation fears rise, commodities like oil and gold often surge, and alternative currencies get a quiet boost. Understanding this dynamic is crucial, because the entire Iraqi dinar conversation exists within this framework, not outside of it. The opportunities aren't in chasing headlines, they're in understanding the range. As we look towards 2026, the dollar isn't in a phase of unchecked dominance anymore, it's in a management phase. What are the signals smart money is tracking? First, persistent US federal deficits. Second, the rising cost of paying interest on that massive debt. Third, a reduced appetite for US treasuries from foreign buyers. And finally, quiet experiments by central banks around the world to settle trade in currencies other than the dollar. Now let me be very clear. None of this means a dollar collapse. That's not what this is about. It's about range control. When the dollar is being actively managed within a range, it creates breathing room for other currencies to adjust and find their own stability. This is exactly where Iraq fits into the picture. A common myth is that Iraq is trying to overthrow the dollar. That's completely wrong. Iraq's real objective is much more practical. They want to reduce their exposure to dollar volatility and build internal stability. They're aiming for stable purchasing power for their citizens, reduced currency arbitrage between official and street rates, and predictable pricing for imports. A managed dollar range gives Iraq the two things it needs most: time and space. Time to implement reforms and space for gradual, controlled adjustments without causing economic shocks. Now for the part most people miss. How does this 25% range specifically affect the IQD? The Iraqi dinar isn't designed for a sudden, overnight revaluation. That would be chaotic. It's designed for controlled appreciation, backed by sound policy and a strengthening banking system. So, if the dollar begins a controlled move down from the top of its range, the dinar doesn't need to suddenly explode in value. Instead, it can reprice internally. The central bank can adjust official rates to close the spread, and trust in the local currency can grow organically. This is a quiet, deliberate process, not a lottery ticket event. This reveals the fundamental difference between retail and institutional thinking. The retail mindset asks, when is the RV happening? It's a question based on hope and timing. Smart money thinks differently. It asks, when will the global currency range shift force a repricing of the dinar? This question is about policy inevitability, not emotion. True institutional capital doesn't chase viral thumbnails or emergency alerts. It positions itself based on predictable structural shifts that are set in motion long before the public even notices. It moves ahead of the emotion, not with it. Central banks are the conductors of this orchestra. They don't chase markets, they shape them. They adjust liquidity, signal their future intentions indirectly, and coordinate with other central banks to avoid global shocks. If Iraq were to adjust the dinar's position, it would happen strategically. It would likely occur during a period of global dollar rebalancing, within this managed range, and with as little public drama as possible. That's how you preserve financial stability on a national and international level. They move slowly and deliberately because their goal is to prevent the very shocks that many retail speculators are hoping for. This brings us to a major psychological trap in this space: the obsession with time. For years, we've heard, "It's happening this week. Any day now. Tomorrow is the day." Smart money completely ignores this noise. Why? Because real financial moves are based on fundamentals and policy, not on a calendar date. The constant tomorrow thinking only creates anxiety and poor decision-making. 2026 isn't some magic year pulled out of a hat. It's what we can call a consequence year. It's a point in time where the policies implemented years earlier finally start to bear fruit. The structural reforms begin to pay off, and the financial systems built in silence start to function as designed. So, if you want to track progress like the pros, what should you be watching? Forget the rumors and dates. Instead, watch these quiet indicators. First, the spread tightening between the official CBI rate and the street rate. That's a huge sign of stabilization. Second, watch for a reduction in the dollar auction volumes. This shows less demand for dollars and more confidence in the dinar. Third, track the increase in digital IQD usage within Iraq. Fourth, look for stability in import pricing. And finally, watch banking confidence metrics. Are more Iraqis putting their money in Iraqi banks? These are the actual mechanics of a revaluation, not fantasy triggers. Have you ever wondered why the people who truly understand currency markets don't go on TV shouting about specific rates? Because it's counterproductive. If you're a serious player, you don't broadcast your expectations, you don't hype numbers, and you certainly don't try to anchor public emotion to a specific outcome. You understand that new currency rates emerge after the underlying systems are strong enough to support them, not before. The rate is the result of the work, not the starting point. Think of this 25% dollar range as a global pressure valve. When pressure from US monetary policy builds up too high, the valve releases. Emerging markets get some room to breathe, trade routes can rebalance, and local currencies gain flexibility. The Iraqi dinar benefits from this indirectly and gradually, not dramatically and overnight. And that's exactly how smart money prefers it: predictable, manageable change, not chaos. A stable environment is where real wealth is built and preserved. So, what happens if the dollar just stays comfortably inside its range for the next few years? That's not bad news at all. In fact, for Iraq, it's a great scenario. It means more time for gradual dinar strengthening, reduced volatility, and increased public trust in the financial system. This allows for long-term positioning and the steady compounding of value. But what if the dollar is forced to break below the bottom of its range? That's when things get even more interesting. Inflation control would become the top priority for the US Federal Reserve, dollar hoarding around the world would likely decrease, and alternative trade settlement systems would gain serious traction. In that scenario, regional currencies like the dinar become strategically important, and the case for structural value adjustments accelerates. But even then, the process would be controlled, slow, and deliberate. Ultimately, this topic separates the thinkers from the followers. Most people in this space are looking for excitement, instant validation, and certainty. They want a winning lottery ticket. Smart money operates on a different level. It seeks probability, it exercises patience, and it focuses on structure. Watching the 25% dollar range isn't exciting. It's not going to give you a daily adrenaline rush, but it's effective. It's about understanding the underlying forces that shape the global financial system. By focusing on these deep structural signals instead of the daily hype, you can position yourself based on logic and strategy, not hope and emotion. Thank you for joining us for this deep dive. If you found this analysis helpful, please hit that like button, subscribe to Iraqi Dinar Alert, and turn on notifications so you never miss an update. We're committed to bringing you the signals that truly matter. See you in the next video.